Alright, alright. Alright, guys. Alright. Let's see. Oh, are we still connected? Hey, what's up? What's up? Yo, yo, yo. Alright. So let's begin. But before we take a look at the main, oops, that's not what I want to do. Take a look at the main ticker for tonight's live stream. I want to go over the markets. Okay, so as I've directly referenced down below, or as I've directly stated down below in the description box, I'm going to go over a little bit of what I've told my CFO Swinger Watch Report readers and kind of give you guys a little insight as to kind of what goes on in the report, specifically in certain specific sections. So for example, I'm going to be talking about a little portion of the market summary section, which is a couple pages, and then talk about path, which also constitutes about 3 pages of the CFO Swinger Watch Report as well. It's a complete top-down analysis on this single ticker, PATH, uipath, or ticker symbol path. Okay, so with that being said, let's go over ticker symbol SPY, or the S&P 500 ETF. So first of all, I highlighted the fact that the markets may continue to show us this type of potential correction. It's like, oh, I'm correct, and then nope, I'm not gonna correct, and then nope, I'm gonna correct, and I'm not gonna correct, right? So sorry for the stutter there, guys. So you know, it's kind of flirting with this potential, you know, -5 to 10% correction from these current highs. And the reason why we know that is that, well, the daily 50 SMA, this is a crucial long-term SMA, has finally caught up with the price after that very strong pivot that we saw from April's lows, and obviously that official crossover moment in early May. I talked about this these couple of days here multiple times in previous streams and videos. And this is very important because as of now, we have retested the daily 50 SMA twice, okay? And one was just last Friday, that was the second one, and then the first one was in the middle of October, right? So mid-October. And you might be thinking, okay, so why is this significant? Okay, so first of all, it's significant because, well, it just underscores the fact that this underlying trend, which is an uptrend, is still very strong. Why does it indicate that it's a very strong uptrend? Because we've pivoted away from it and we were able to snap right back above the daily 10 and the daily 21 SMAs. Okay, and to me, based on my SMAs, and again, this can also apply to EMAs if you guys use EMAs, this just indicates that the bulls are willing and ready to buy and buy and buy and defend this long-term 50 SMA and eventually bring it back to the short-term SMAs, which are my 10 and 21 SMAs. And they were able to prove that again, that they're willing to defend this SMA support area, because last Friday we had a massive hammer candlestick, a very nice pivot from the lows. I think it was around like the middle of the day when we had a nice pivot, and then eventually into the end of the day, the last half of the day, I think like the last hour and 30 minutes, we got that very nice large push, right? So yeah, right here. Okay, the last hour and a half. Okay, got a massive push. Yeah, exactly an hour and a half. Okay, so and eventually today we got a nice follow through day with a very nice big gap up. We almost ended up with well, we ended up over 1.50%, but almost a 2% day if we were able to continue to push up higher. But again, massive move. I mean, just from a percentage perspective, roughly speaking, from last Friday to today's closing price, or I guess maybe make it a little bit more accurate. Let's see. Okay, so from last Friday's lows to today's highs, okay, that's over a 3% move, 3.20% move. or let's just say 3.15%. All right, 3.15% move. That's a very large move within 2 days. Okay, so you know, it just clearly underscores the fact that we are seeing bulls ready to defend this daily 50 SMA. So that is the major reason why it's a significant retest and pivot that we're seeing here for the past 2 times. Now, here's the other side of this retest in the daily 50 SMA. So first of all, again, I love the fact that we retested it and pivoted away right away, and we came right back to retest and go back above the daily 10 and daily 21 SMAs, which bring back the short to mid-term uptrend, right? But again, on the flip side, things get a little bit more concerning, right? The market continues to throw these potential downtrending signals for the future, right? And again, the first one was the fact that market breadth has been breaking down over the last month and a half or so, around there. Okay, that's what I was saying. Maybe about 2 months now, but about a month and a half. But then it keeps on continuously bouncing back. But the overall trend has been slowly seeing market breadth contract, right? We don't want to see that. We want market breadth expansion as the market is continuously hitting highs and new all-time highs, especially. But then again, the markets can always move to new all-time highs, even with just a few select leading stocks like the big tech stocks, which it has been doing for the last, like, I would say 2.5, 3 months, right? But then again, market breadth has continued to recover. However, again, from a bigger picture, we're seeing market breadth contract. That's not good. And as we're seeing this, okay, we're also seeing 2 retests of the daily 50 SMA that are fairly close to each other. All right, that's not good, right? I don't like to see an immediate, in the long-term perspective and in long-term sense, this is a pretty immediate retest, right? Back to back. All right, this is just from mid-October, and now this is early November, right? It's only been a couple of weeks. So to me, that's another signal. And if in the near-term future, if you get a third retest on the daily 50 SMA, now that's going to be another big signal that, hey, we should probably slow down here and we should start to kind of take our positions off the table slowly, all right, ever so slowly. Because if a fourth retest comes right immediately after the third one, which tends to happen, that's a pattern that I usually see when we see a third retest, we usually get another fourth retest the next day or the next couple of days or even just the next week, right? We will most likely start to break to the downside, okay? But again, these first 2 retests are a surefire signal that, hey, we should be looking out for a potential third retest where we need to be very, very serious on the fact that we might be seeing a potential pullback or a correctional move of -5 to 10% from these current highs. All right, so I use the daily 50 SMA as a long-term gauge as to whether or not we're about to see some sort of a pullback or especially a correctional move in the long-term future. Okay, and again, why am I talking about long-term future? Well, because, well, the daily 50 SMA is a very long-term SMA, just like the daily 200 SMA. And usually, on that fourth retest or on that fourth break below the daily 50 SMA, that's usually when we start to see a larger move to the downside, and eventually we start to get very, very close to the daily 200 SMA. All right, so shorting that will be very, very fun. So that is my general idea using my technical SMAs here as to what can occur after these 2 very, very close consecutive retests of the daily 50 SMA so far. Okay, now another technical indicator that is kind of indicating that we should be watching out for the long-term future is, well, the RSI, right? So the RSI, unfortunately, okay, from the pivot high points perspective, and I'll show you guys what that means soon, it has been diverging for quite some time now. So what we're seeing here, guys, is a hidden RSI bearish divergence. Okay, or hidden bearish RSI divergence, whatever you guys want to say, right? If you guys want to flip those words, whatever it is, right? Vice versa. Or not vice versa, but if you guys want to flip those two words, RSI or hidden or bearish, whatever it is, okay? This right here, okay, has been the trend so far. Do you guys see this? All right. Meanwhile, right, the price itself has been making higher highs. So this is a hidden RSI or hidden bearish RSI divergence. Now, on the flip side, on this specific quote unquote indicator, is that this usually means that during a very strong uptrend, okay, we're just basically seeing the RSI resetting to allow more room for bulls to continue to move up higher. And that's true. In fact, from a longer term perspective, from ever since we hit this high in July, right, and late July, all the up into now, right, if we consider this entire range of motion, or this range of oscillations from the RSI compared to the price, has just simply been the RSI resetting to allow the price to come back up to hit new all-time highs, right? To allow that movement of traders who follow the RSI to buy back into every single dip during this entire very strong bullish uptrend. Okay, so again, that's when we're considering the entire picture here from late July all the way up into now, right? But as we're seeing the combination of market breadth deterioration and overall technical retests twice now on the daily 50 SMA. Again, this is a very, very quick retest back to back, right? It's only a couple weeks difference. If you combine it with that, right, with those two factors, with this current bearish RSI hidden divergence, okay, as long as you guys understand what I'm saying, all right? I know there's an official term, but again, it doesn't really matter as long as you guys understand what I'm saying. It just doesn't seem like it's a good idea. Well, just overall, it doesn't seem like it's a good idea. Oh, did we stop for a second? Oh, no, okay, we're good. It just doesn't seem like it's a good idea that we should be trying to be uber long and bullish into next year, right? We can't be expecting us to just go parabolic, right? Where we just see this type of move, right? It's almost like what crypto traders expect to see, right? So this right here, it's just unrealistic as we're heading into the new year of 2027, right? So hey, what's up, guys? Welcome. I'm almost finished talking about the markets, but again, if you guys want to so far since I began 14 minutes ago, make sure you guys watch the replay. Okay, so based on this overall technical analysis in the markets, I personally think that we should be very, very bullishly cautious into the end of the year. And again, this is exactly what I told my CFO Swinger Watch Report readers in the market summary section of this week's report. And also, I've talked extensively about this daily 50 SMA retest as well, and the reasons why I think it's going to be a cautious warning signal that we need to be aware of, right? Cognizant of in the near to long term future. I would say long term future for now, right? Because we're talking about the daily 50 SMA, but that all comes down to and all boils down to how many times that we decide to retest the daily 50 SMA. And as I have stated about 10 minutes ago, how many times, right, we're going to retest it? Because again, we've already retested it twice. And on that third and fourth retest, right, on those two last retests, if we do get them, and well, not just if we do get them, but based on how far away those two retests are. Because again, the third retest can come anytime in the near to midterm future. But if that fourth retest comes on the very next day after the third retest, or maybe a couple of days after, or maybe the next week after, that's a big bearish sign, right? And we need to be very, very cautious of that. All right. So again, that hasn't happened yet. I'm not trying to scare you guys, but these two retests definitely have been a very good dip buy signal. However, it's just based on the overall criteria and all the different reasons that I give you guys, like the market breadth deterioration or the fact that we have this current bearish RSI hidden divergence, it's kind of suspicious, right, as we head into the new year. All right, I am all for the fact that we can have a nice Santa Claus rally. All right, that's great. But I've also given my CFO Swinger Watch Report readers potential thesis that I don't think anyone's talking about regarding the market performance from 2018 to 2019, that transition. I don't know if you guys were there, but I was there as a trader. Also as a crypto trader back then too. I was very active in crypto from 2017 to 2019. That market performance kind of raises some eyebrows as to what we could potentially be seeing for this year. So if you guys really wanted to know what I've written for my readers, make sure you guys become a CFO Swinger Watch Report reader tonight, so you guys can get access and gain access to the previous reports, not just the current this week's report. Okay, and you guys can always find that link, the very second link down below in the description box. Okay, I am planning to have a discounted price for the rest of this year, so make sure you guys join when that is available. All right. Okay, so that's kind of my spiel for tonight for the markets before I move on to the main topic of tonight, which is PATH. Okay, and let me first take a look at SPY futures. Yeah, so SPY futures is looking pretty good. We made a higher high so far. Oops. I'm going to be expecting VIX. Yeah, so VIX futures had a nice contractionary move today. All right, this is what I want to see. I don't want to see expansion. It already had its moment last Friday, and very nice pivot back down. But I really wanted to start breaking below and back to the lows here, back to the 17s and the 16s. Okay, as we've seen so far historically on VIX futures. All right, and that translates to around 15. Yeah, so around 15 to 16. Okay, I would say 14 is a little bit too much on the low side because there has been a complete change in the price action and the overall market action so far. And I'm not going to be expecting to see, excuse me guys, I'm not going to be expecting to see much more contraction below 15, maybe even below 16 from this point forward. But again, I would love to see VIX continuously being crushed like this. Okay? So with that being said, let's take a look at PATH. Okay, this is a very significant ticker for me because I am starting to become very, very bullish on this company for good reasons too, from a growth perspective and from the fundamental perspective as well. But solely tonight, I want to take a deep dive on the technical analysis of this company. Why? Well, I've given my overall analysis, my deep analysis in the report, but I want to give you guys from the public view here for all my 601 subscribers to be seeing what I'm seeing here, right? So first of all, as I've already shown you guys, there's a very nice rounded double bottom that's occurring here. Okay, so let me even just draw it out for you guys if you guys want to see. Again, I even made a little joke that looks like a butt, right? Okay. So we have the left cheek here and the right cheek here. Okay. All right. Now let's go back to being serious. So we have a nice W chart pattern, a very nice rounded double bottom chart pattern or a W chart pattern, and I'm looking to see whether or not we want to make this curved right side of this W chart pattern or this rounded double bottom chart pattern, and I think we can. And that's the reason why I've been so focused on PATH in the longer term perspective, trying to get back to over $26. And why? Well, because that was the previous supply area. The most recent supply area was from late 2023 all the way up into the very first quarter of 2024. So to me, this intrigues me, right? To me, this feels like, hey, maybe we can see something here, right? Maybe if you were to see this overall double bottom, rounded double bottom or W chart pattern being fully formed and the price going through with this chart pattern, there's a good chance that we could be seeing some sort of a retest of this major supply area from 24.50 to 26.50. And so I think a nice whole number level to be looking at, well, obviously are these two levels here, 24.50 to 26.50, but a nice target of $26 flat, I think is a great long-term target for anyone who's very bullish, or at the very least betting on the fact that path has a very nice long-term path. See what I did there, guys? Nice long-term path towards a higher valuation as the market re-rates. The fact that path and its robotic and autonomous agentic AI capabilities, once it realizes its capabilities, such capabilities of this company, it will be able to see a more institutions specifically putting on a position into this company. Okay, and so far we've started to see some funds, some ETFs as well. I think for UiPath, I think one of the small cap ETFs. I think I forgot what they were called, but they did start a new position in this one. So they added Path as one of the small cap. I think I saw it. No, did I see it in here? No. Yeah, so it was a small and mid cap. I should remember. I don't know why I don't remember. I forgot the name of the fund, but I think they hold small to mid. So SMID, SMID. That's the acronym that people like to use. SMID ETF. I'm pretty sure. Or SMID fund, ETF fund. Either way, guys, you guys get what I'm saying here, right? So that's kind of what I want to see, right? I want to see more institutional buying coming in for this ticker, and I think from a long-term perspective, from a technical perspective, it just makes sense that the price would want to get back to the 20s here eventually, right? And obviously, I just made this level here. There's that monthly level of $22. And obviously there's a huge I guess you guys can try to have a monthly long-term target of 22, 24.50, and 26.50 at this point, if you guys are extremely bullish on this company, just like me, right? And I have money on the line for this for this company. So I think I even added last week as well on the retest of $14. So I think there's a good chance that we see some, at the very least, more bullish participants coming into Path based on how the overall monthly chart pattern looks. Yes, there is a lot of overhead resistance, okay, ever since its IPO days, right, in 2021. But unfortunately, Path decided to IPO at the peak times of IPO, and where we started to see most IPOs starting to crash back down from their very high valuations during their initial IPO trading days. And eventually that led into the market crash and bear market of 2022, and Path continued to go lower from that overall market downward push as well, right? And eventually for 3 years, right, since 2022, we've been, it's almost 4 years at this point now, almost. Once we cross, I think maybe after the first quarter of 2026, if you're not at least near the high teens here, maybe 18, 19 by the end of this year, I'll be surprised, right? But okay, that all comes down to the overall tech and AI sentiment, risk appetite, and overall market action too. So I also wouldn't be surprised if that's what causes Path to continue to move sideways and consolidate. But anyways, as I was saying, this is a very large consolidation and very large base that it's been forming on the monthly time frame. Now, if you just go back in the weekly time frame, though, right? So with all that being said, okay, with all that being in mind as well, this right here is the base that I'm looking at, right? This is a massive base as well. Another macro base, because this is a multi-year base, right? It's, well, not multi-year, at least it's over a year now, a year and a couple months. So from this massive earnings move downwards, okay, in late May of last year, all the way up into now, we have been making a nice base from 10.50 all the way up into $15. All right, and so as I've stated this week in this week's CFO Swinger Watch Report, again, this was the main swing trade idea for this week, a 3-pager section of the report which was for this week, it was only 11 pages. They usually tend to be 12 to 13 pages, sometimes 15 pages, depending on how much I write in the market summary or how many ideas I give out, additional ideas in the momentum mentions list or the list section. And again, if you guys want to know what that is, all right, make sure you guys read the report. Become readers of the CFO Swinger Watch Report. Again, I can't stress this enough, right? I really think that many people it doesn't matter if you have experience in the market for 8 years, 10 years, or even just a year, or even just a couple months. You guys will most definitely, really definitely save a lot of time researching the markets, but at the same time, not just saving a lot of time, okay? Simultaneously, you guys will be able to learn and earn, right? Because the markets are still continuously providing lessons for everyone, no matter how much experience that you have. I'm almost nearing the decade point, all right? I'm 8+ years in. So, you know, by the end of Q2 next year, I'll be, yeah, it'll be 9 years at that point, right? So, you know, to me, you know, I'm still learning, right, of how the market moves, but I know I have a bit more of an edge because I know how the market moves already, right? There's some foundational movements, market actions, and price action, and price trends, and just overall movement of the markets and rotations, money rotations, sector rotations, that bring some sort of familiarity for me, right? Immediate familiarity. I can understand what's going on, right? Without having to really dig in too deep, right? So that's kind of my my idea of writing this report, to give you guys my deep insights as to how I understand the markets, of how I'm understanding where the markets are going in the near-term future and the long-term future, and give you guys this broken down, summarized in layman terms report on the overall markets and with individual applicable trade ideas. And again, I know it's a swing trade report, but you guys can always use every individual idea that I give in the report as day trade ideas too, because they work, right? My ideas work as both a swing and day trade styles, right? So again, if you're a day trader, no matter what type of trading style you guys have, I can guarantee you, I'm saying this from the bottom of my heart, I'm being absolutely serious here, right? I honestly believe that you guys can always learn something and actually apply my trade ideas to actually profit off of it, right? You can actually profit off of a report that you're reading that is sent to your phone and your emails every single Sunday night. Okay, and again, I am saying this seriously, right? I'm not just trying to have you guys become readers. I really honestly think that if you guys are really struggling, or at the very least are having trouble with the time, or coming up with time to research deeply, right, like I do every single week, for not just an individual trade ideas, but just the overall markets, I think this report is for you. And again, I think this report is for everyone, actually, right? So again, if you guys are curious as to what I've just said to you guys there, if you guys are really interested, maybe piqued your interest a little bit, make sure you guys hit that second link down below in the description box, and that'll take you to the subscription page, which will give you guys 4 different tiers that you guys can choose. All right, make sure you guys read all the different perks that you guys have for each individual tier. And again, we have a free trial as well. We have a trial session as well, right? Oh, well, it used to be free, but now I believe it costs less than your usual coffee that you might be getting, or maybe whatever else that you might be spending every single day, because you know everything is really expensive now. So if you guys want a trial session, please let me know, right? Or at the very least, you guys can just immediately just go to that link down below and go to that tier that says trial and try it out, right? I really think that doing a trial won't hurt you at all, like literally at all. Okay, trust me, guys. Okay, so back to what I was saying before I end the stream here. Oh, it's been 30 minutes already. Wow, 31 actually. So with this very nice base, I really want to see some more constructive action now. Since last week, we're able to break below $15. And again, I said this last week as well for PAC because I had this included in the list, the momentum mentions list, the kind of the last half of the report. And again, so you guys will know if it's a last half section of the report if you guys are readers. Okay, I specifically stated that I don't think the bulls have enough energy, momentum, and overall just sentiment and hype to allow the price to break out of this nice weekly bull pennant flag until it allows the weekly 10 SMA to catch up. Because judging from last or the 2 weeks prior closing price. Okay, so let me show you guys right here. Okay, we're about, so the 10 SMA or the 10 weekly SMA was around right here, right? So it was, I think it was about 15%, yeah, about 15% away from the actual price action or the candlesticks. And so to me, that was a little bit fishy, right? And the fact that even if we were tightening up right at this weekly 200 SMA, it just felt like the price just needed a reaffirming retest at the weekly 10 SMA before it decided to get back over this multi-year macro $15 whole number resistance level, this neckline resistance level that makes up the entire flat bottom here, right? This bottom flat base, right? Bottoming base here, this flat base. And it would need some constructive tightening below this $15 level again after this retest of the weekly 10 SMA in order for us to get back up. And to me, that just makes sense too, right? Because this type of action last week, obviously it was attributed to mostly from the overall market action, but as an individual name, just strictly from the perspective of an individual price action as well, this could be a very nice way to flush out weak buyers and eventually allow stronger long-term investors to dip buy at these discounted prices compared to 2 weeks prior or even just last week, and kind of load the boat here in a sense for the longer term, right? And so to me, if we do see constructive tightening and action underneath this $15 whole number level this week, I would want to see a nice breakup higher and eventually retesting and coming back into the ranges provided by the bull pennant as we head into earnings, right? Earnings, which is coming up in the very first trading week of December. Okay, so I really want to see a nice push up higher into earnings, and obviously I really want to see them do really well, stellar earnings, and obviously very good outlook and guidance. That's going to be very, very important for these small to mid cap AI, well, companies that are very, very much involved with the AI revolution. I want them to actually provide good numbers, but not just good numbers, but they're good outlooks, right? I want them to raise their guidance, raise their outlooks as to what the revenue is going to be, what they will be earning next year, right? In the next quarter, okay? Whatever it may be. Maybe they upgrade their full year guidance, whatever it is, okay? Or maybe they beat the overall estimates that they've had since this fiscal year began, right? I want to see something positive, really positive like that, that seems favorable for us in the near-term future. Okay, so again, I wouldn't mind a nice run-up into earnings in about 3.5 weeks. Okay, but again, even post-earnings, excuse me, I want to see at least another second retest of 18.50 here. Excuse me, guys, because we haven't seen that yet. All right, we oh god, hiccups, guys. Give me 1 second, guys. Okay, my hiccup is not going away, guys. I think I think that's a sign that I need to finish the stream here for tonight, guys. Oof, let me get some water, guys. Hold on, give me 1 second, guys. Sorry about this. Okay, I'm back, guys. Hopefully it's gone. My apologies. Maybe the water trick will do me well. So that's kind of it, guys. I really just want to see some very constructive action. Obviously, you know, maybe for some long-term investors, it's getting kind of, I guess, frustrating is the right word here. Frustrating, yes. For the last year and a half here at this point, because, you know, we have just been stuck in this range, and the fact that last week's price action brought them right back into the upper ranges of this consolidation is probably going to be forcing out a lot of the quote-unquote weaker hands. So basically they're not really considered weaker, but since they've been holding for so long, but they might just become so frustrated that they had to sell, which is kind of the reasons why we probably saw this move down. But from a technical perspective, again, since I've been doing a nice deep dive into technical analysis here, path, I think the price just, again, had to retest this weekly 10 SMA, as I've literally stated last week in the report, right? So again, just remember that I think it's critical that you guys understand that path just needs a lot of room at this point in this upper ranges of this overall multi-year consolidation, and you're gonna need some patience, especially if you're playing equity. And you should have patience because you're playing equity, right? I don't know why you wouldn't, but you know, I think it's just one of those things where you just expect to see fast moves because you think that it's going to be a very nice growth stock, especially as a small to mid cap company, right? If you're looking at such companies that are involved directly with the AI revolution, and anything with considering, you know, AI infrastructure, or just the overall building of AI hyperscalers, data centers, whatever it may be, right? So, you know, with Path here, which is definitely getting involved in the next phase of the AI revolution, which is the agentic AI phase, the actual application of AI, since the overall infrastructure is already being built, has been built, is being they're starting to operate these hyperscalers and HPC data centers, right? I think Path has a lot of room to grow as a leader in the agentic AI space, and I think this little tiny quote-unquote hiccup back down to this weekly 10 SMA just provides even more fuel and more energy to build up the overall long-term optimism that investors need to see Path back to the 20s here, as I've been talking about, right? So we have three distinct targets, right? 22, 24.50, and 26.50, right? And I think the max ideal target will be 26 flat for me, okay? And that's the reason why I've been saying Path $26 in the previous videos that I've posted here about Path. And yeah, it's all purely from a technical perspective whenever I'm talking about price targets, guys, right? And so, you know, when it comes to obviously fair value or the DCF price targets, right? Discounted cash flow target. Let me actually look up what the actual DCF target for UiPath this, if it's even gonna show up. And this kind of cash flow target of maybe do I need to yeah, so the fair value is around 18 bucks if I were to round it, right? So, you know, obviously that's not that far away, right? But from a percentage perspective, that's about 26%, right? That's a pretty good, I would say that's a pretty fair it's a pretty fair a move, right? So, you know, I think with Path, the market again just has to re-rate them as this potential leader in the overall agentic AI phase that I think most people are not well, they're slowly realizing, they're not realizing it, but they're slowly realizing where they need to move the money to allow the money to work for them that will be directly involved with this agentic AI phase, right? And again, UiPath is uniquely set up to be very, very effective at this agentic AI phase and become a leader in this agentic AI phase because they're already very, very knowledgeable and experienced in autonomous, complicated autonomous functions and solutions, especially when it comes to robotics, right? Excuse me, not robotics, but specifically what they like to call RPA or robotic process automation solutions, right? And I talked about this extensively in this week's report as well, if you guys want to know what that is. Okay, so again, everything can be found in the report. It's a 3-pager. I always write specific 3-pager top-down analysis on my main swing trade ideas for every single CFO Swinger Watch report. And again, that's just one single section of the report. We tend to see 11 to 12 pages on a good week, but if I really want to get down with the information and data, I can get up to 15 pages. Okay, and again, you might be saying, wait a second, isn't that too much to read, or isn't that a little bit time consuming? Well, try doing the research that I do to be able to write the report and give you guys a summarized breakdown of the overall markets, my trade ideas, and research that I do to figure out what tickers that we need to be looking at that is looking to give us, you know, A+ chart setups and etc. from a fundamental and technical perspectives. Right? If you think you can do all that, go ahead. Right? But again, I really think even just from a time saving perspective, guys, I think this can really, really help you guys. Right? And this report can really save you guys time. If you guys really are tight on time, if you guys don't have the energy or again, simply the time to generate ideas for you guys to either invest or actively trade in, the CFO Swinger Watch Report is your go-to report. All right, I think I'm not trying to brag here. I'm not trying to compare myself to others, but I really think I have a leg up against other people who write just overall very brief market summary reports, like just through email or something like that. Because again, I give you guys a full, complete PDF breakdown report that is sent directly into your emails on every single Sunday night. Okay, so again, I think there's a lot of good stuff that you guys can get out of the weekly report that gets sent to your relative or your respective email inboxes. So if you guys are really interested, make sure you guys check down below in the description box. Okay, it's the second link down below. I can guarantee you guys will not be not satisfied. Well, you guys will be satisfied. What am I saying there? Trying to use double negatives there the wrong way. You know, let me make sure I drink some water. I was about to get hiccups again. But again, I don't think you guys will at the very least regret joining, even if you guys join us only for the trial. So if you guys want to check it out, right? Check out the report and check us out. Make sure you guys look at the second link down below in the description box. You guys will have 4 different tiers along with that trial period tier that you guys can choose if you guys want to. And yeah, I think great things are waiting for you if you guys are still kind of a little bit on the sidelines, on the fence about joining. But again, I can guarantee you guys will always learn something, whether or not you guys have been in the markets for a year, a couple months, 3 years, 5. Okay, you guys will learn something, trust me. And at the very least, you guys can actually profit off of the ideas that I'm giving you guys, or even just off of the market summary. Right, I know many people out there who are reading the reports strictly for the market summary on how to determine which direction that the market could be going in the near to midterm future. Okay, so with that being said, I hope you guys enjoyed tonight's stream. I was solely focused on the technical analysis on both the overall markets, right? Ticker symbol SPY and ticker symbol PATH or PATH, or the company's name is uipath. Right, this is the company that's leading in RPA and agentic AI solutions. So make sure you guys check this company out. If you guys don't know what they're doing, just go to their website. They have their little about tab and section, so just read that. I think most people, really just look over the fact that they can just go on any publicly traded company's website and look at their website, right there, or even just their homepage, just to see what they're about. Okay. All right, so with that being said, good night, good luck tomorrow, and I'll see you guys on Wednesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Make sure you guys smash that like button down below. And if you guys are new here, and I don't know why you wouldn't be doing this if you guys enjoyed it, but make sure you guys hit that subscribe button, and on top of that, hit that notification bell as well to stay on top and updated as what I upload on this channel, along with when I am live. And again, I am live on Mondays and Wednesdays. Sometimes I decide to just put out videos on Mondays and Wednesdays, but whatever the case, okay, you should be notified because I provide a lot of good, simple YouTube videos that you guys can use, right? And again, all the information that I always give you guys in these videos are applicable. What does that mean? Well, you guys can apply it to your own trading accounts. You guys can actually get positions. That's what I'm saying when I mean applicable. All right. So again, hopefully you guys can join us. And yeah, I'll see you guys on Wednesday at the same time as tonight. And good luck tomorrow.